You ever see a company's stock get absolutely hammered after an earnings report, only to find out that regular investors are actually getting more excited about it? Well, that's exactly what just went down with Canadian Solar. It's a company now caught between two completely different stories. So let's dive in and figure out what is really going on here. So, on one side, you've got Wall Street. After Canadian Solar dropped its second quarter results, the professionals smashed the sell button, and the stock just plunged over 15%. But then, on the other side, you have retail investors, Main Street, who saw the exact same news and thought, hey, this is a buying opportunity. Their bullishness actually went up. And look, this isn't just a gut feeling. We've got the data. Retail investor sentiment is sitting in the extremely bullish zone, scoring a whopping 89 out of 100. So while the big money was heading for the exits, the crowd was actually digging in and getting more confident. And this all leads us to the big question for today. Is this a company that's in real trouble, justifying that huge stock drop? Or is Wall Street so zoomed in on the short-term headlines that it's completely missing the bigger picture that so many other investors are seeing? To get to the bottom of this, we have to look past those scary headlines about missed revenue and earnings. We need to pop the hood and see if the company's engine is actually stalling out, or if maybe, just maybe, it's running stronger than ever.
Right, so here's the crucial point. The negative numbers weren't because the business itself was broken. It wasn't that people suddenly stopped wanting solar panels. It really came down to the timing of when some very large projects were officially sold, plus some one-time accounting write-downs. The underlying business, well, that tells a very different story. Okay, first piece of evidence, 29.8%. That was Canadian Solar's gross margin. Now, in simple terms, that's the profit it made on everything it sold, and it's a record high for the company. So even though total revenue was lower, their profitability on the stuff they did sell was actually better than ever. Now, this one speaks volumes about the health of the core business. The company generated a positive $189 million in cash just from its operations. It wasn't burning money, it was making it, and that shows some really strong financial discipline and a healthy operation. And here is the growth engine. Their energy storage division, the part that sells these massive battery systems, saw its volumes jump 57% compared to last year. This isn't just some little side business. This is an explosive growth area that's becoming absolutely central to the company's future. So how does all this build toward the future? You see, the bull case for Canadian Solar isn't about one single quarter. It's about the massive infrastructure they're putting in place for the next decade of energy demand. I mean, just look at these numbers. The company has a pipeline of future solar and battery projects that is simply enormous. We're talking 27.3 gigawatts of solar and 80 gigawatt hours of battery storage. That contracted storage backlog alone is worth over $3 billion. This isn't just a plan on paper. It provides a really clear line of sight into where billions in future revenue are going to come from. And a huge piece of this future is being built right here in America. Canadian Solar is investing hundreds of millions of dollars into new factories in Texas, Indiana, and Kentucky. They're making a massive bet on American manufacturing, and believe me, there's a very strategic reason why. And that reason has 3 letters. IRA, the Inflation Reduction Act. This policy provides massive tax credits for solar components that are made in the U.S. So by building these factories, Canadian Solar gets to directly capture those government incentives, which will make their products cheaper to produce and a whole lot more profitable. It is just a brilliant strategic move. But wait, who is going to buy all this energy? Well, a massive new customer is showing up that almost no one was talking about just a few years ago: artificial intelligence. The data centers needed to power AI consume incredible amounts of electricity, and that's creating a new super cycle of power demand that solar and storage are perfectly positioned to meet. Okay, so let's start connecting these dots. We've got a short-term market panic, strong underlying financials, a huge future pipeline, and this massive new source of demand from AI. Now, how does the company stack up against its rivals? In the competitive landscape, Canadian Solar's unique strategy really does stand out. Unlike First Solar, which is heavily focused just on the US, or Jinko Solar, which is all about massive global volume, Canadian Solar is diversified. They sell modules, they sell storage systems, and they develop their own power projects. And crucially, unlike their big Chinese rival Jinko, they were profitable in 2024. So what do those Wall Street analysts really think, beyond that initial panic? Well, their price targets tell a pretty interesting story. The average forecast is still over $12,
with a high of $21. That suggests that even the professionals who sold the stock believe there's significant upside from where it is right now.
So who has the most skin in the game? This is key. The company's founder and CEO, Dr. Sean Kwa, personally owns about 11% of the company. When the person who knows the business inside and out has that much of a massive personal stake, well, that's a powerful vote of confidence in its long-term success.
So, what this all boils down to is a classic conflict. The market reacted to one quarter's delayed projects and accounting charges. The bulls, on the other hand, are looking at a decade-long transformation in how we generate and use energy, and they see a company that is perfectly positioned to profit from that huge shift. Which leaves us with this final thought. With the explosion in demand from AI and data centers just getting started, is it possible that the biggest growth story in energy is hiding right there in front of us, just disguised by a little bit of short-term market noise? That's the multi-billion-dollar question.